Peter Cardillo, Chief Market Economist at Spartan Capital, is also with us all the way from US. Peter, how did you wake up to the news of attacks of retaliation on US airbase by Iran this morning?
Well, obviously, this was expected. I was a little bit surprised. I thought they were going to wait a bit longer, but they did take action, and as a result of it, the markets have responded in a negative way. Obviously, we have safe haven investments going through the roof, gold trading over $1,600, and the price of crude is up over 4% as we speak. And, of course, the equity markets is under severe pressure. But, as I said before, this was widely expected. And now the next big question for the markets is, are we going to see panic selling as the markets open in the States Wednesday morning? My guess is no. We'll have a nasty opening, a bumpy ride. But I don't think we're going to see panic selling. And I think that when it's all said and done, that we'll continue to have a bumpy ride in stocks due to the uncertainties between the United States and Iran. But I still think that we're not headed for any major war in the Middle East, that is, with Iran. And I doubt very much that Iran is going to close the Straits of Hormuz, which would virtually stop the flow of oil. And that would be very damaging, not only to the United States, but to the global economy as well, and their own economy. So I don't think that that's going to be the case. Yes, we'll have negativity. We'll have up and down days, but I don't think it's going to unravel the bullish sentiment that the market has had up until now.
Yeah, in fact, the general who's taken over in place of General Soleimani did warn that they have identified 13 strategies and they'll retaliate for so. And then, without much delay, the retaliation has actually happened. What explains yesterday's rebound in global equities? Even crude had sulked in. If this tail risk existed on the table, why did U.S. markets or global equities did not, see follow-up pressure? In fact, there was a sharp rebound.
Yeah, that's a good question, and I think the answer is simply this: that it appeared that Iran was in no rush to counterattack, and of course that was proven wrong this evening. But again, the fundamentals of the stock market and the U.S. economy are quite solid. We see that on a daily basis. We see that with the macro news. In fact, today we saw that with the ISM non-manufacturing service, which actually expanded. We also saw a narrowing of the trade deficit. True that part of that is due to tariffs, but nevertheless, it certainly is a good indication that economic activity in Q1 of this year is probably going to be a surprise to the markets. And so the fundamentals remain in place. Now, of course, if we would get involved with a long-lasting war, that would take a bite out of economic activity, but not to the point where it could send us into negative growth.
Question then, if you do not expect this issue to become a full-blown war, what are your thoughts on the emerging markets which had started to move higher, the extra liquidity from central banks globally which had started to move towards emerging markets in the last couple of weeks? Do you think that is at threat because of what has happened geopolitically? At least that would be halted in the interim.
Well, look, the emerging markets, have begun to spring up only because of the fact that the global market, the global economy, has basically shown signs of regaining strength. And let's not forget that next week the first part of the trade pact between the United States and China is going to be signed. And that's a relief in terms of global economic activity. And so, again, should we expect bumpy markets? Should we expect the markets to have nasty trading days? Absolutely. But are we going to get into a situation where it's going to be a downward trend and the emerging markets are going to follow suit? I doubt that very much because, as I said before, the fundamentals of the United States are strong, and to a certain degree, we're seeing the global economy beginning to pick up somewhat. Look at some of the numbers that have come out of Europe recently, and even some of the numbers that are coming out of China. So I think that, that's the real basis for the stock markets to avoid a major reversal and wind up in a bearish trend instead of a bullish trend.
We'll let you go on that one. Thanks very much for your time helping us analyze the repercussions of the retaliation from Iran to General Soleimani's assassination.